What is up, guys? Good afternoon. Good afternoon. Abdel Khawatmi, your favorite mortgage lender. We are going to be going live in a few seconds, or actually, we are live already. We're going to go over the market update, specifically what do we have going on in terms of interest rates, what is currently happening. Most importantly, we got a lot of changes that have been slowly occurring, and we're going to dive right into it. Okay, guys, so I appreciate you guys tuning in. What is happening in regards to the real estate market? We're starting to see a little bit of transition with interest rates. Today was finally one of the first days where we actually saw some positive news when it came to the interest rate mortgage market. Today was the first day, if we actually go back. Mortgage News Daily is always my trusted resource as we go through it every single Monday. But if you guys scroll in, we can kind of basically see since January 1st, 2024, where we're kind of slowly at a pretty big jump where we basically started closer to, it was about 6.7. We're now at about 6.87. So what really happened over the last couple of days is we started seeing a little bit of some unhealthy data, right? The unemployment data came out, that came in a little bit higher than we wanted to. And then we also got some data when we talked about inflation with the CPI. This Friday is going to be a big day when we talk about the PCE report, the Personal Consumption Expenditures report. What is going to be the readings in regards to that? How's the Fed going to simultaneously pivot in March? Are they going to indeed look to cut? What do we have kind of going on? So you'll kind of see over the last few couple of days, we've been seeing a little bit of an uptick. So uptick. This is the first day, really in the last 4 or 5 days, that we're seeing a decline of interest rates. One of the major declines, I think we'll start seeing a little bit more of a silver lining from some of the data that we got, right? But talking about last week, so last week, obviously, what caused some of these rates to kind of bottom out? The first thing we look at is we see home sales and constructions obviously slowed down in December, but buyers and builders are still confident and still optimistic in regards to that information simultaneously in working on getting properly approved, right? And then we talk about December's existing home sales, which has bottomed. We have home builders who are optimistic. We went over builder confidence in one of my videos last week, going over that as well. We're seeing solid showings for single-family construction. We're seeing an uptick in regards to permits and completions. Holiday shopping season, of course, was stronger than expected. You know, I'm not going to lie. I ended up going in and spending a couple bucks, probably more than I wanted to, right? But I think that's just second human nature when you get into the spirit of that, right? And then we started seeing initial jobless claims fall below 200,000. And that's really what kind of shook the market a little bit. Because remember, jobless claims, the two main things we always need to look at is inflation and looking at jobless claims. Those are the two most important things that the Fed has told us in advance that we really need to monitor, okay? So when we talk about existing home sales, again, we reached just about a 3.2 month supply in homes. That is super low. That is such a friendlier seller's market than a neutral market or a buyer's market. So it is super critical that we make sure that we set the proper expectations with our clients in regards to inventory still being super tight. That way the expectations are set thereafter, right? So existing home sales fell 1% from November to December to about a 3.78 million unit pace. Again, that came in obviously a lot lower than what we were expecting with NAR. The sales were about 6.2% lower than they were in December of 2022. And again, remember, mainly, although rates really dropped in December big time, we're almost as high as 8. We went to really around 6.5 at one point. I actually lost one client at 5.99 with an FHA loan. So, you know, again, the report is showing the number of consistent closings that we're having again. And it's also showing that number based off of people shopping in October and November, right? And that's kind of when rates slowly started to turn. Now, again, note from Lawrence Young, the lowest month sales look to be at the bottom before inevitably returning, of course, which is what we're kind of expecting. I think we'll start seeing this month. I'm already seeing so much activity, so much additional data that we're seeing from a lot of our clients that are allowing us the ability to take advantage of that, right? Now, again, more supply is obviously needed, right? If we just have about 1 million homes that are available at the end of December, it's down by about 1.13 at the end of November. So obviously we need to start seeing a little bit more inventory so we can start getting a little bit more of some friendly data. Now, the one big positive note, though, if you'll notice that home builders optimistic. So we always get something called home builder sentiment, and you'll actually slowly kind of see that we're ticking up at one point, right between August to November, we saw a little bit of a downtick, and that was obviously because rates were on an increase. We're now kind of seeing the opposite approach where home builders are starting to feel confident in regards to building new homes. Remember, the main issue that we have is obviously inventory. Rates high, rates low. I locked 3 clients today, 6.75, 6.9, and a 6.25 borrower who's paying 2.5 points by choice. But again, setting the proper expectations in regards to that, it can teeter anywhere from 6.25 to 6.9, really depending on your credit and your assets, right? So that's always going to come and go. But the inventory part has been something that we always want to make sure we stay on top of throughout the consistent market that we have, right? So we're starting to see 3 index components again that moved higher this month, which is great. Sales conditions are obviously moving up. Future sales expectations have surged to almost 57, putting us in that positive territory, right? Now, solid showing for single-family construction. So again, we talked about housing starts and permits last week, and you'll see right over there, when it came to permits, we had a little over 1.5 million permits filed, 1.46 starts. We saw about 1.68 million when we talked about construction and about 1.57 when we talked about completion. All positive upticks month over month and also year over year. This is great. This is what we've been looking for. We're slowly starting to see that. So again, housing starts, although it did diminish last month, which is generally accepted, right? Single family homes did see a little bit of a downtick in November, but we're seeing solid showings and solid requests, right? Now, building permits, again, were up by almost 2%, 1.9% from November to December, which is showing that it's at the highest level that it's been in over a year, which is great. Now, again, the bottom line when we talk about housing starts and permits is mortgage rates slowly fell below 7%. And like you guys just saw right now, we're kind of right under that as well simultaneously at roughly 6.87 for that creme de creme borrower, right? But that boost in supply is going to also simultaneously open the market for many buyers who are struggling with inventory. We're doing a lot of different array of different programs as well, from our self-employed borrowers who need bank statements, P&L, 1099 programs, making the necessary adjustments. If they can't go traditionally, that's okay. This is what you need to do in order to get properly qualified, right? And then this boost in supply, I think, is also going to open the doors for a lot of different buyers. We're already seeing it now. Now more than ever, we're seeing a lot more buyers start to tap into the market, knowing that rates will eventually tickle down. Is the Fed going to potentially give us the cut that we're expecting in March? Honestly, I really have no idea. I think the consensus right now is about 45 to 50% that they're going to cut, which is still kind of leaving things in limbo, but we will eventually expect that we will see that cut. If it's not going to come in March, it's going to come in April, May, definitely. That's going to gear us right into a busier spring, summer season, right? So again, holiday shopping, retail sales. This also kind of caused a little bit of a downtick when we talked about inflation and spending, where retail sales rose by almost a point, 0.6% November to December, which crushed expectations by almost double. Sales were up 5.6 compared to last year. People are still confident in spending money. This is something that we really want to kind of monitor because at the same time, the Fed wants to make sure that if the economy is staying resilient, do they necessarily need to cut if people can still afford, or do they necessarily need to hike even to slow people down from spending? Those are the really important things that we want to make sure that we're staying on top of. And then the big part too, in addition, we took so many haymakers over last week, was jobless claims. Jobless claims fell below 200,000. Now, who knows if this information is correct or not? Honestly, I feel like they've lost all credibility for me when it comes to this stuff because the numbers keep getting revised every other week or every month. But we saw it decline by 16,000 with 187 people filing for unemployment for the first time. Not only did it go below expectations, but it was actually the lowest reading in September of 2022. Remember, this is happening, though, around right after holiday seasons and stuff like that. So that could potentially also play a role. But initial jobless claims are usually always in the start of the year. They usually tend to decline, as I mentioned, after the holiday. So again, that low number of employers was kind of sort of expected. And we did suggest that it's harder for people to simultaneously go, right? So what are we looking at for this week? Again, this week, Thursday, Friday are going to be 2 big data weeks. On Thursday, we're going to get the typical initial jobless claims that come in for the weekly. And then Friday's a massive big day. That's the PCE report, Personal Consumption Expenditures report. That is the Fed's favorite gauge when we talk about inflation. How are people spending their money? Is the money simultaneously being spent and put good to use? Is the employment market starting to simultaneously bond with it as well, right? So again, mortgage bonds kind of ended just over 101. If we take a look at it right now and kind of see how our mortgage bonds, I know they were on an uptick of about 10 basis points. So you see that we're kind of at 2, where we were dropping a little bit, and then we actually just ended up in positive parameters. So again, this has an opposite inverse relationship when we talk about mortgage bonds. When mortgage bonds are obviously in the green, that means that interest rates tend to slow down. So we'll kind of see, this is from October, which is really the time when rates took a turn, right after Halloween. Mortgage bonds, you'll see, anytime it was as low as 97%. This is when we started seeing rates in the 7s and 8s, right? And really high 7s, low 8s. Now we're starting to kind of creep back up to roughly about 101. And you guys can see over the last couple of days, we've been kind of teetering roughly around there. So we're going to kind of sort of see exactly what is this break that we're looking for to hit this ceiling of 101.3, which should give us the necessary ability to continue seeing rates start to decline. I appreciate you guys jumping on. As always, any questions that you guys have, let me know. I'll catch you guys on Wednesday. We're going to go over a lot of different topics of loan types that we have in place, and then we're going to take it from there. Thanks, guys, and I'll catch you guys soon.